G'day traders, today talking about the three biggest mistakes that I made in my trading. The first mistake that I made was believing that my knowledge of technical analysis and my study of all the study and everything that I'd done in the markets was going to make me money. I emphasize a lot when I talk in my videos and in my explanations of how I trade is focusing on setups. Over time, learning, again, just studying, learning, tweaking, and reviewing and looking at actually where my weaknesses were, what was the end goal, and where was the gap between what I was actually doing versus what I wanted to accomplish. Because I did not have a real edge, not having an edge is what leads to impulsive, irrational, emotional based revenge trading, anger trading, hope trading, fear trading, anger trading, all of those things. No edge leads to that irrational behavior, and that irrational behavior is what would put me into tilt. So as I've talked about, I would go on a good run and build up an account and then blow it out through, exactly that, just, random impulsive trades that would balloon out and then end up blowing out an account. And that leads to the third thing, which is I did not really understand risk management. Now, I talked about this in a recent video explaining how it is all three of those are integrated. Like Brent Penfold talks about the 3 M's of the stool in trading. And when you don't have the edge, that leads to recklessness at some point, which is, without having playbook setups, you don't have the emotional grounding and foundation to understand that you're a sniper to execute those setups. So when I see traders saying, oh, I missed that move or I caught that move, those sorts of things, that means that you're trading the moves, which again, it's entirely every individual's decision how they trade. There's no right or wrong in the markets. It's whether or not it's working for you, and that end result for me is to make money. So the difference between a person who wants to be right versus a professional. So the next component of that risk management was understanding how to grade those setups and control my risk on those setups. So all of those setups have been skewed and filtered down to the highest probability setup. So my lowest risk reward setup would garner the lowest amount of risk. My higher probability, higher risk reward opportunities, stronger conviction trades would garner my conviction in terms of taking on the largest amount of risk. And again, you're filtering and refining and developing the process where all three of those are linked. So now, executing a trade setup, my risk is predefined, my profit target is predefined. I have a trade management plan in place in order to extract the maximum out of a potential larger winner. Also controlling my downside or limiting the loss as much as possible on a losing trade, but reproducible setups in terms of frequency, and then the instruments that provide those, and a filtering mechanism to identify the highest probability trade setups. Now, had I done this from the beginning, that would have saved me a lot of time. But the other side of that is that until, I've experienced some extremely devastating experiences in the markets in terms of losses, just being emotionally crushed through mistakes and unrelenting desire to achieve the end result, make a large income, more than I could have ever made in my traditional profession. Sometimes you need to go through some painful experiences in order to really understand the power of those three. Having an edge, execute that edge in live time, and then that gives you the mental and emotional capital forged through those painful experiences to know to execute that edge and the risk management and to take money out of the market. You're not adjusting your plan as you go. You have a plan. You know exactly what you're looking for. If it's a sell high setup, I know what my setups look like. If it's a buy low setup, I know exactly what my setups look like. I know what I'm going to do when the market does something. I know what I'm going to do, and it's one of three things. I'm going to be buying, I'm going to be selling, or I'm going to be doing nothing. And if I enter into the market, I have a strategy already mapped out in terms of how that trade will be executed, managed, and come to completion. So these are all the things that will enable any trader in any to be consistent, be able to duplicate that and reproduce the results and scale them up in size. So had I not made these three mistakes, one mistake transforms into the next mistake, which transforms into the third mistake, and those three are what will prevent most traders from not only becoming consistent, but becoming consistently profitable, scaling their trading business up in size. So hopefully you got value from today's video, traders. Define your edge, know exactly what you're looking for. That gives you the mental and emotional capital, rock solid, bulletproof trading mindset to execute your plan, which is your priority is risk management. Then if it's a profitable trade, extracting the profit out of the market and then shutting it down and waiting for the next best trade setup. So have a great day, and may the markets go with you.